Welcome everybody. It's Don Kaufman here. Oh, just make sure everybody's, you're ready. Are you? I don't think you're ready. Anyway, welcome everybody. It's Wednesday, March 27th, 2024. Spoos with 3 minutes to go to the cash open. They are furball. We're starting off on the wrong foot over here. That and people are like complaining about music. Listen, you don't complain about music because you feel old. Listen, I don't play anything that's like what in the last 10 to 15 years because it all sucks. You want me to play some Taylor Swift? Is that where we're going with this? Huh? I start playing that, I'm out. That's it. I am out of here. I would rather feel old than play that crap. How about that? All right. With that, clearly I've had enough caffeine this morning. The S&Ps might be up 27 handles. However, if you take a look at auto expected moves, we're exactly where we started the week. Yay! So we're going to open the week. We're going to open more than halfway through the week here on this Wednesday. Remember, tomorrow is Thursday. Yes, that usually comes after Wednesday, but it is also the tomorrow is synthetic Friday because Friday the markets are closed, kind of closed. There's big news coming out on Friday, but that's okay because the market's technically closed. Volume is surging right now in the S&Ps, but it's still incredibly light and fluffy. Take a look at the bond market as well. The bond market not doing anything. What's moving right now? The Nasdaq. The Nasdaq is on fire. The Nasdaq is taking off to the upside, but it's all for absolutely nothing, depending upon what Nvidia is going to do. So Nvidia in the pre-market, it's actually been incredibly quiet. It's traded 1 million shares, but it's been incredibly quiet. So what's the big bid? Look, you got Tesla ripping again. Yay! I'm just kidding. The thing's been getting hammered lately. You've actually got Meta on the bid. By the way, speaking of Meta, if you look at the auto expected moves here, it's actually at the lower edge of the expected move. Did you know that? No, you didn't. Okay. No, you didn't. Anyway, there's a bunch of tech stocks that are kind of lower edge of the expected move, and they're getting a bid back under them this morning. Anyway, the usual suspects, all mildly bid, but take a look at the energy sector. Energy sector is lower. That is going to damage your advanced decline line coming in this morning. So if you're bullish, that's fine, but expect that the advanced decline line is going to be a little bit funky. The financials also have a decent bid under them. So you're coming into a cash open that, if you said, point your finger at what's really making the market rally, I got nothing. It's a couple of tech stocks that are bid, maybe a little financials, but there's nothing like in particular, right? So we saw that big sell-off yesterday into the close, and things got a little crazy. So maybe some volatility. I'm not comfortable. I'm all jumping around this morning. Maybe some volatility comes back into this marketplace today, but we're going to open right now on strong advanced decline line, not the strongest, strong advanced decline line, big positive ticks. Anything plausible though, Nvidia, things got crazy. Let's come to today's cash open. Into the open we go. The advanced decline line, first of all, is much better than I would have anticipated. I'm going to say exactly why. It's because the energy sector is down. That's correlated. Okay, that's correlated, baby. That's much better. Look at that. They're even buying Intel. Look, nobody likes Intel. Even I don't like Intel. No one likes Intel. Wait a second. I don't like anything. Positive 1,300 ticks. It's raging strong, but take a look at the NASDAQ right out of the gate. It's wild. That was just a 25-point move in the first 30 seconds inside of the NASDAQ. It's wild because Nvidia is getting a little bit, it's going to get a little crazy out there. There's no question about it. The bid under the marketplace, as I said, it's not Nvidia. It's not, and Tesla's, meager right now. It's just like the tech stocks are all up. This is interesting. Doesn't look like a lot of the recent trading sessions we've seen. It's really interesting because this is what real correlation looks like. It's just the S&Ps drove up and everything's moving with it. There's no leaders in here. Like I know you're, look at Microsoft. No, it's not leading. It's basically in the lagging edge even of the NQ right now. Interesting. I find it interesting. This is very, very different. Trade has thrown us a little bit in terms of differentiation day to day. The financials, though, are effectively ripping strong out of the gate. So taking a look at financials, bring up auto expected moves. They were unchanged as of yesterday. Today, they've got a little bit of a bid under them. Speaking of expected move, let's cruise over here to the SPX immediately. So before you get all hopped up, look, the S&Ps are rallying. We're unchanged right now in the week. Literally, like this is, I'll zoom in. We're zooming, okay? There's zoomage. If you zoom in, oh, I'm gonna get crazy with this one. Oh, I'm sorry, people, we're down on the week now. The week started here. Okay, damn it, where's my drawing tool? I'm all off this morning. So this morning I was like having problems with my my pewter. Okay, my computer was having problems this morning. Oh, my drawing tool is not going to come up. Really? Okay, are we having this kind of a day? The drawing tool is seriously not coming up. So, but the computer really wasn't having problems. The problem was me. Sorry, I just did that. The problem was it was me. Turns out problem. I had the problem I was having was my speakers weren't working. Well, apparently I had hit my legal pad into the power button. I know. Okay, I know. It's crap happens. Nasdaq's coming off hard and fast. Oh, this drawing tool better work. I mean, I had to actually go into like, control alt delete is going to happen if oh, it won't give me my drawing tool. Oh, I can't survive without it. All right. Oh, here it is. Here it is. We found it. Anyway, this started the week. By the way, all of that was to do this, and now we're here. We're slipping. We're three points off on the week. So Don is having issues today. That may have been a better way to do it. That's where the week started. That's where we presently are. That looks much less spectacular, doesn't it? Anyway, the NASDAQ continues to slip a little bit. Take a look at Nvidia. As I said, this thing could see some serious slippage throughout the course of this week. It's, I don't want to say it's the only stock to watch, but it is the only stock that is going to move the S&Ps. And as an individual product, that's the stock that's going to move the S&Ps. And, look, you can come in, you can talk about buying a dip in here, and that's fine. But if you take a look at expected moves, we're not even home to the lower edge of an expected move. In fact, one thing I wanted to point out, and I think that this is critical, and I think it's something to take into account. When I say critical, like I don't say that lightly. I was looking at this just before the cash open. I actually had it up on the screen a few minutes ago. Maybe I wasn't showing that screen at the time, but the last time that this thing, Nvidia, even hit the lower edge of the expected move, like right there, it hit an upper edge. This one cracked the upper edge. Yeah, it was upper edge. Okay. You're 1, 2, 3, 4. This would be the 5th week. We hit it for a brief and fleeting moment over here, but I mean, holy crap. There is what I see on my screen only, okay, 1 week in recent history have we actually hit any lower expected move in Nvidia. Okay, I'm going all the way back to the beginning of the year. Only twice this year have we actually crested through the lower edge of expected move, which then, of course, got me looking at the SPX. And in the mother of all products, here's actually a breach of expected move. There's several hits in here, but it's few and far between, right? There's another hit over here. There's another hit over here. But like Nvidia, okay, there's just nothing like it. And what people have to understand about Nvidia, okay, Nvidia is not just because its market cap dragged the whole marketplace higher. That's one thing that people don't get, okay? But it is the critical driver. It's not, I was reading an article the other day, and it's written by a very intelligent individual, and I know him, okay? And I kind of went after him about the article. We might not be on talking terms after this. He did respond, okay? But I'm going to tell you exactly why NVIDIA is so critical. And this is actually, gentleman actually writes a quant newsletter. Still trades really heavily, but he writes a quant newsletter. It's good. It's only available to like industry, costs an absolute fortune. And it's like one of the few things I can't give you because that's, you know, limited. Like if I gave it to like 1,000 people, everybody knows where it comes from. It would come from me. Anyway, it's much more of a quant letter, and it had to do with Nvidia against the S&P 500. And it basically kind of went like this. It said, look, Nvidia is incredibly strong, and Nvidia is, you know, a critical portion, of course, of the S&Ps, which, by the way, we shouldn't even be watching Nvidia. We should be watching the Nasdaq. Look at that. Okay. No, no one would ever get the name of it. It's not Huntsman or anything like that. No one would ever get the name. Nobody knows this one. It's something we used to read years ago at TD Ameritrade. Anyway, the kind of goes like this. So I mentioned that Nvidia has had this incredible rally higher, but what people miss about the incredible rally in Nvidia, okay, is Nvidia is the linchpin behind statistical arbitrage. If you move Nvidia, okay, in its market cap higher, you're actually moving Nasdaq. Okay, as you move Nasdaq, even if, like, you know, stocks in the Nasdaq are not rallying, it causes them to rally, right? So the more you can move Nvidia, the more you can actually force Nasdaq. The more you're moving monsters of tech, the more you're actually moving S&Ps. Anyway, the article was discussing that, look, okay, yes, Nvidia has moved up, and yes, Nvidia is critical, but other stocks have also made these dramatic moves. My point was a very simple one, okay, is those stocks were making dramatic moves because of Nvidia. Because Nvidia was actually, if you will, the spark behind the arbitrage that drove markets higher. And what people, okay, don't understand about stat arb is if you can move Nasdaq, or if you can move S&P, you move the whole basket, right? If you just came in screaming into the S&Ps and just started buying S&Ps, let's say you had, you know, $1 trillion of capital, and you just start coming in here screaming, buying S&Ps, you'll move every stock in the S&Ps higher. Well, what we saw was Nvidia, okay, where they're actually forcing, and it was interesting because it's only billions of dollars of calls are being bought in here, but the buying of calls was sparking, okay, the arb to push the stock higher as dealers had to go out there and, well, deal with their negative delta by buying stock. You buy Nvidia stock, the stock goes up, okay, it drags the Nasdaq higher, drags the S&Ps higher, and then the basket, which is the entire S&P, okay, floats with it. The one reason, and he's like, back and forth, but the one reason that I point so much to it is that the degrees of correlation during the entire rally and for the 4 months were extraordinarily low. And there are so many stocks that are terribly performing in the midst of this. So lo and behold, okay, the belief is that, yes, you can actually move one stock. You can move the entire marketplace. And that, okay, would cease to exist when you start seeing higher degrees of correlation, okay, make Nvidia far less important. Like the market was Nvidia dependent. If it gets higher degrees of correlation, it's less Nvidia dependent. Of course, unless Nvidia starts to really sell off and starts to flip that correlation over, which is exactly what we might be seeing right now. This is fierce in the first few minutes. By the way, there is no entry point. Like if you actually scalp with somebody like Tony Rago, okay? If you scalp with like Tony Rago, there's no entry point. This is what we call shorting into the hole. It's a death wish. You have to bid back before you can actually short. So the one thing that I know there's people in this business and they've been in the business a long time. And I actually sometimes think that you've been in the business a long time. Sometimes that can be a little bit to the detriment because what transpired, 30 years ago, I don't want to say it's a different world. The business never changes, right? There's still emotions involved. You want to figure out where crap is going. I get that. But the one aspect that's often overlooked is how interconnected we really are. Like every freaking thing on that screen. And it's been, I don't know, probably 10 years since I've been to like offices. I was at offices at Citadel like 10 years ago. It's been, yeah, it's at least 10 years. It's like 2000. Yeah, it's about 2013, 2014. I was going there a lot. And they had this crap back then. I just have a pretty damn good feeling that if it was connected then, it's like, times 100 now. And I haven't been in their offices, but I have friends that work at some of these firms. But the one thing you have to keep and start to rationalize, and this blows people's minds, okay, stocks like Nvidia move up for reasons other than people want to buy it. Okay. Stocks like, here you go, like, DJT, okay, rally for reasons that you ain't never gonna know, right? And it's okay. Look at this. It's brand new issue. It's up $10 today, but that's some serious options. We'll talk about that in just a moment. I mean, again, there are so many things going on in the business that, you just suffice to say, if you have market making firms, proprietary trading firms, and hedge funds, if they figure out ways to make money in markets other than being, okay, bullish or bearish, okay, then whatever happens in movement in the marketplace, okay, suffice to say, they don't give a damn. And their trade could cause some spectacular rally. They're not benefiting from the rally. Do you think any market making firm, do you think like, Citadel is sitting there go, yay, S&P's 5,300, yay. You think they're having parties every time the Dow, okay? First of all, like a Citadel, they don't even know what the beep the Dow even is, okay? Nobody has any idea what the hell the Dow is. Nobody's looked at the Dow in 30 freaking years. Okay, except maybe, I don't know, mainstream media, CNN and Fox or whatever the hell that is. Okay, and you wonder why nobody watches that crap anymore. Mainly because no one looks at the Dow. Even CNBC, okay, they still have the Dow on there. I mean, come on. I'm serious about that too. The Dow isn't a dying instrument, it's dead. The only thing that's worthwhile, like maybe for public, consumption. I had my father-in-law over the other day, and he's talking about like the Dow's 40,000. And I'm like, really? He's like, aren't you in this business every day? I go, yeah, I keep it on the screen, but I don't ever look at it. Okay. I don't ever remember one day in Chicago ever walking, out of there being like, the Dow hit. I remember actually when the Dow was at 8,000 though. Just making a point. Okay. So first of all, you rationalize, people are looking at stuff, and yes, it's okay because you can make some money in stocks that go up and stocks that go down, and that's fine. Okay. But this business goes a lot deeper, and what drives markets, okay, just like you have to succumb to the idea, okay, forget about the fundamentals for just a second because there don't have to be fundamentals behind this. I saw the statistics coming out. I was actually listening to, when I work out now, I listen to like different podcasts and so forth. Everybody always asks me, I don't listen to any podcast about finance, none, but I did find one interesting. That was actually one of the lead developers from Meta. Not just lead developer, he runs AI at Meta. And he was talking about the number of, I think it was A100 cards they bought from Nvidia was like $300 billion. Just Meta bought like $300 billion of Nvidia cards, except it would take them like forever and ever to make that. Okay. I thought that was quite interesting. And I was like, okay, but there's no rational valuation still at the levels that it's at. I was sitting there like, he was talking about, this developer's talking about, buying $300 billion, but it's a 2.2 or $2.3 trillion company. It's no, I don't listen to like Joe Rogan and that crap. Okay. I honestly, okay, nothing against Joe Rogan. I listen to like relatively intelligent individuals. He's relatively intelligent, but he's not on the same level as like the guy that runs AI or, anyway. No, I listen to a lot of tech geek crap. Okay. I have to stay out of my, industry because I can't listen to like financial crap because I'd be like screaming back at them. That's not going to be healthy for anybody, is it? Screaming back at them like, you idiots. Anyway, You're seeing a little bit of selling going on here, but it's like 1%, right? Ah, man. So somebody was mentioned Larry. Okay. So yes, Larry Williams and I never talk about like trading. And if we do, I'm like, you do realize you're a dinosaur, right? And he's like, that's not nice. And I'm like, it's not nice, but is it true? And he's like, maybe. Yeah, Larry's 81. 81. Sorry. Okay. There were no computers when he developed many of his studies. It's different business now. Okay. It's the same, but it's different. See the financial starting to roll over. What's interesting about today's marketplace is we started to roll over, picked back up the advanced decline line. I mean, that's still full blown correlation. All right. So we're a few minutes into the trading session here. I don't want to say there's not a lot going on. Look, right out of the gate, this is better volume than we've seen as of late. Okay, it is better volume. The bond market is non-existent. Time of death. I don't know, 3 days ago. The thing is stiff as a board. The Nasdaq saw some pretty good sell side activity. I might suggest that this is going to see another round of selling. Why do I suggest that? Because about half of your big tech stocks, including like Tesla out of the gate, got smoked, which is interesting. This was a big bid under Tesla this morning. I was trading 181, I was trading 177. That was right at the forefront of it. This is a dangerous place because even the energy sector rallied up on that one. It's a dangerous place because if Meta, Nvidia were to come back, it could really rock this market to the upside. However, I know we'll take a look at ticks. They've cooled off. The advanced decline lines hot as can be. It's a bit of a rotation right now. It's just they don't seem to be rotating out of stuff like Microsoft. It's again, this is a very precarious area this morning that we're trading in, and I'm kind of a bit fascinated by it because the only things that are being sold right now, like the only things are being sold, are Meta and Nvidia. Tesla is kind of an odd stock out. I'm not sure why it got hit out of the gate, but you can imagine the concern would now be Microsoft, Apple. Apple's had the crap beaten out of it lately. So I don't have to sit here and say like Apple has to be down, but Microsoft would definitely be a concern specifically today. It could unwind that NASDAQ in a hurry. I'm looking down the list of usual suspects, okay? And I'm pretty shocked that the S&Ps are still up 27 handles with the NASDAQ barely holding it together, right? And the S&Ps look like they're going to even break higher. Speaking of which, yeah, Apple is up 1.5%, right? But again, if other tech sells, it's going to sell too. Again, Apple is no longer any leader in any club. You know, it's definitely today up, the 1.5%, which is definitely helping S&Ps. Okay, nothing's going to be able to hold this market together though if we start seeing them come for Microsoft, and Microsoft does look like it's going to see some sell side. Yeah, we'll get a feel for that. But what I'm shopping around for right now, okay, and I'm kind of pausing and keep looking back, shopping around for an intraday trade on here, but it's really sketchy out of the gate, really sketchy. It looks like the S&Ps are going to sell off a little bit more, that these things should be in the teens in the next couple of moments, okay? But I don't really want to take the shot because there's no feel for these financials right now. I am watching volatility, which pumped in just a little bit in the last, few minutes. Speaking of last few minutes, to the calendar we go. I'm just bringing you over to the calendar because on a day like this, that's kind of funky. You should be concerned about different catalysts and so forth that can come in. There aren't any. There's a petroleum status report, and that's it. Tomorrow, there's some pretty big data coming out tomorrow morning, but nobody really seems to give a damn. Like, if you look at tomorrow, it's end of the quarter. It's about a $30 expected move, but that includes today and tomorrow. Today, the price action SPX okay, was only supposed to be 20 bucks, but we're already having a $30 move. So we're smashing through expectations today. What do you expect? Okay, so today we were looking for plus or minus, what is it, 1960? By the way, if you guys are curious, where I get the 1960. So the thinkorswim, these thinkorswim servers, okay, think back, takes a snapshot of data about 15 minutes after the close. And 15 minutes after the close, right there, it said 19, basically 60. Look, I rounded up, even though I should have rounded down. That had to piss a couple of engineers off. I like it. And yet, again, I was talking about listening to podcasts earlier of engineers. Just listening to engineers. You're in my brain, man. Okay. I'm still laughing at Brent's comment, like Joe Rogan. Yeah, I'm going to spend 3 hours listening to him while working out. Really? Okay. No. It's not bad. It's just, okay. There's a lot of garbage in there. That line in the middle of your screen is exactly where we started the week. So whatever you might think about the marketplace, we're pretty much flat right now. Look at the Nasdaq. The Nasdaq is still on a technical level. It's down on the week. So Nasdaq is actually off a little bit on the week. And again, I'm coming in here. I'm not coming in here today guns a-blazing. I'd like to take a trade, but I'm going to tell you, everything feels really soft right now in big tech, really soft. Like Nvidia might just go for it to the downside. And if it does, it's going to take Microsoft with it. It's clearly taking Meta with it. Tesla just thinks it's like its own animal today, which is fine. Tesla's not really going to impede upon the S&Ps anymore. But I am telling you, the NASDAQ right now, okay, it's in trouble. It's in big trouble. Big trouble. Forget for a second about Apple. I don't give a damn. Apple could continue to soar. Soar, Apple, soar. It ain't going to make a difference. Okay. You lose Meta and you lose Nvidia, and it'll take Microsoft right with it. And that'd be it. We are seeing a rotation right now, and it's an interesting one. Buy everything but these tech stocks. Buy everything but these tech stocks. They're even rallying back energy. And if you haven't seen energy, oil in the last day, and counting tomorrow, like yesterday and today, seeing a little bit of sell side activity, nothing huge. I'm surprised oil didn't move with everything that's going on right now, the Baltimore bridge collapse and so forth. I'm surprised some commodities started moving on it, but not as much as I would have anticipated. It's an interesting problem because it's rare the markets, I don't think they have it handicapped. They haven't figured it out. Look at the sell side activity here. Okay. As I said to you guys earlier, like I would expect the S&Ps back in the teens, and you're getting just that. It's all Nvidia right now. Nvidia cracked, and it did exactly what we said. And this is where I didn't take the trade, but it is what it is. It's sketchy, right? Nvidia is going for it at this point. The volume in there is absolutely huge. Taking a quick glance. Ticks haven't even flipped over negative. Just be aware that we are in a correlated state. And the reason I keep looking back at that and saying, oh, be aware over here, the only thing that we're selling right now, okay, is Nvidia. And you kind of feel like there's just nowhere else to rotate money. They're like, we should just screw it. Let's just buy Boeing. By the way, you have to sound completely belligerent when you're buying Boeing at this point. I don't care if you work there. I don't care if you're the CEO. You're leaving. It doesn't matter. You have to sound a little belligerent, though, if you're going to be buying Boeing at this point, or United for that matter. Okay. I'm sure I've offended a few pilots along the way. It's okay. I don't fly United. Was it a Seinfeld episode? I'm sorry. He saw your act last night. They kicked, was it Seinfeld got freaked out and then he kicked him off the plane? Okay. That was, I think, the episode where Kramer was gambling again. God, it's all messed up in my head. It's good stuff. Sorry, I was reading over there. I applied this. I'm reading somebody else's comment. I applied for an engineering program once. I was turned down. They said I had a personality. I got it. Okay. I got it. Uh, yeah, the CEO of Boeing, $24 million for the performance. Okay. Um, Eric, the Led Zeppelin song would definitely be more effective than I am right now. I'm a little pissed that I didn't take some of the trade, but as I was saying this morning, that was not shortable. That was a back through. I bet you anything, Rago right now is killing it on this one. Absolutely killing it. I'm actually looking right now. For those of you that don't know this, Rago has along with Corey and Blake, there's a futures room, and he's in the futures room right now, and he's live. And I know his trading style, and he was waiting for the bid back before actually hitting it again. Um, hmm. This is a tough market though, because you just don't expect. The Nasdaq was up 117 points at the bell. It's now unchanged. We're 27 minutes into the day, and I'm telling you right now, if I am a little quiet here, is because shh, just let it happen. Okay. The interesting thing is going to be is the entire marketplace is incapable, and I just want you to see this. The entire marketplace, and it's been you know not just it's been everything I've been talking about, where we get correlated. You have 13 stocks that are seeing sell side, but really the only thing that matters in here is Nvidia. Okay, Meta's taking just a mild hit. You're about to see Microsoft go negative. You have one product that just took apart the Nasdaq, and the yes, we hunting rabbits. Okay, the interesting part of the whole trade in here is you're like, whatever, man. The S&Ps are up 20. I get it. The S&Ps are up 20, but you haven't yet scratched the surface of any damage in here. You're seeing like, okay, you can see it on the daily chart. It's 2 down days. People, yeah, you're about to hit the lower edge of the expected move. Okay. That's only the second time it's happened like the entire freaking year, but you're about to hit the lower edge of the expected move. We haven't seen anything like, oh, let's get crazy. It started the week at 940. Lower edge of the expected move is 900. Yeah, what happens when it ends up at 840? How much damage could that inflict upon the S&Ps? The answer is a lot. Bear with me here for 1 second. I'm choking over here. All right, Sully, I got it, man. Okay. Yeah, just let the marketplace make its move right now. And this is one where, look, if you wanted to get, excuse me, if you wanted to get ahead of anything on here, the only thing that you would look for is maybe the financials get rolled as the day goes on, because it cracks the entire advanced decline line over here. Okay. That would be it. That would be it. It's the financials that would get rolled over. In terms of individual stocks, highly variable. I would look at one of the financials. I mean, some of the financials are incredibly strong today in a marketplace that could get decimated. Like, I don't think you're going to see a rotation from tech back into financials. The financials have already, I mean, they're full. Look at these things. They haven't hit the upper edge of the expected move, but there's a pretty good probability that if the S&Ps keep getting pulled back, they'll start to sell the financials. And what I'm shopping right now is a trade in those financials. Morgan Stanley's actually applicable. Let's go look at it. It's basically straight up. Yeah, you can go after like some high delta stuff in here. Even this, you got to trade a lot of contracts in there. I would go after the higher delta, almost like a synthetic stock replacement. Just make a quick point here. All right, I'll explain that here in just 1 second. what I just did is I bought just a few contracts, Morgan Stanley, the 94 put, and the expiration's tomorrow. Now, the put that I bought is decisively in the money. Yeah, it's in the financials. Are the financials in the forefront of this? No, it doesn't make a difference, but the marketplace is correlated. So let me give you some logic. The logic is very simple. I just found a product, okay, that was exploding to the upside. Now I know off the top of my head, okay, this is a decent sized move for Morgan Stanley on the day. I do trade the product. I look at it every day. I don't care that it's Morgan Stanley. What I was looking for is the easiest thing to trade, okay, in the strongest sector in the marketplace. And you could look at like, look, you can look at some of the consumer staples and so forth. It's not going to make a difference. I wanted to be in financials because of the liquidity and so forth. And now you're like, how come you didn't do Goldman Sachs? Goldman Sachs is a pain in the ass to trade because of liquidity. It's just not, I mean, it's the open interest. Like, look at this. It's like 96 on here. If I cruise over to Morgan Stanley, there's some size that's at least trading through some of these. And it's much more, just it's easier, it's more applicable. So I bought the Morgan Stanley put. And again, I'm happy to post this into chat if you want. And again, this is a intraday trade. Okay. It's purely an intraday trade. Choking over here. So it's an intraday trade. And what that intraday trade does, I'm going to stand up over here. Can't sit. That's the problem. Hold on, everything here. I must silence the watch. It's vibrating on my arm. Makes me feel kind of funny. Okay. So the bottom line is a lot of people are looking at this tape and they're thinking, there's rotations going on, is what we call risk on, risk off. In fact, Mark just posted that in chat. It's not what it is. What I see in here is very different. I see a heavily correlated marketplace that's getting sucked under, okay, by a handful of tech stocks. Maybe they're done selling though. Maybe they're done selling. I don't know. You're not going to know when they're done selling, but I don't jump on board to what's weak and try to bear up in what's weak. Maybe Nvidia gets killed today. Maybe it doesn't. That's not for me to say. Okay. I am a little surprised that Microsoft has held it together as well as it has. But what I see in here is the second the whole market started getting pulled down, stat arb is starting to sell the whole marketplace down. So you're rotating, like it's literally like moving one side of the boat. Let's move to the other side of the boat. And they move into financials one day and they go out of financials into tech. And then we'll go into here and we'll go into here. And as long as they keep, propping up Nvidia, we're going to be okay, man. But the reality is today, it's not a normal rotation. Okay. Everybody's on one side of the boat. And what happens is when the biggest, okay, individual moves to the other side of the boat, you can flip the whole boat right back over. You can have 90 people on one side of the boat, but one of them weighs thousands of pounds. It's Nvidia. Okay. And if the 1,000-pound gorilla moves to the other side of the boat, it can flip the whole marketplace over. And evidence of that would be seen in something like the financials. So I went and I found, I don't mind trading XLF, but man, you got to do a ton of contracts to get anything done. It kind of pisses me off a little bit. But I was looking and I saw that, the financials, they're up 0.5%, which ain't half bad. But Morgan Stanley is just rocking. I mean, Morgan Stanley right now, okay, it's basically at highs. It's exactly where I bought the thing. Like, whatever. I posted it in chat. It's exactly where I bought it. I think I paid what, $1.21? $1.21. Anyway, if the marketplace starts coming off and there's real sell side, Morgan Stanley will pull back. Will it pull back as substantially? Maybe. Okay. And it's a really even the hint of sell side activity in Morgan Stanley is going to cause, okay, this marketplace to explode. But I'm in a fairly deep in the money. Why did I use a deeper in the money put? Well, first of all, the bid offer spread in here was incredibly tight. When I was trading, it was like 3 pennies wide. It's a little wider right now because it's a little deeper in the money. It's 77 delta. So if this stock sells off by $1, I want you to think about this. If that stock sells off by $1, I'm going to get 78 cents bang for my buck on something I only paid $1.21 for. So I'm paying $1.21 and getting almost 80 cents bang for my buck. That's damn good. So you're like, how'd you figure all that out? Because I looked at it and figured it all out. But I don't know. And again, I want you to understand something. I don't know if that huge sell-off transpires today. Okay. What I do know is that Nvidia is definitely having some kind of a issue, and I'll stick with that. Ticks flipped over negative. The advanced decline line still correlated. Okay. It's a very, again, entertaining day. And this is one where, like, when it comes to the NASDAQ stocks, like I literally sit here and say, like, all right, just let the move happen. Like the NASDAQ stocks, I don't want any part of them right now. I don't want part of Nvidia. Screw that. You think I want to get on like a stock that's down 30 bucks in the day? Okay. Could there be room to the downside? Absolutely. But leave that to the wild child that wants to trade this. Okay. I think that this is an incredibly difficult trade. Okay. So I am seeing something that is a very interesting change, if you will, in here. And that's this. There is absolutely put buying going on in Nvidia. Okay. The put buyers are coming out of the woodwork here. The sizzle is elevated. It's not wild, but it's elevated. But the number of puts, okay, being traded at the ask or above is high. So in any marketplace, like, and again, in a marketplace, Nvidia, market's going to be like 1505, you know, at 1515, like a 10-cent wide market, right? And what this indicates, and let's say that these are puts, okay, that does not look like a put, okay? More looks like a puts than a puts. That was terrible, okay? Anyway, puts, okay? You are looking right now at trade is reaching here, okay? So this is your bid, and this is your ask. They're reaching and just being like, I'll take it, I'll take it, I'll take it. And what you have to understand about that, especially with puts, if you buy puts, okay, as a trader, and it doesn't matter who the trader is. Like I could sit here and argue with this is algorithmic trading. Who cares, right? If you're sitting there and buying puts, okay, what it does is when you buy puts, you're actually producing negative delta for you, okay? The market maker sells you puts. It would produce what? Positive delta for them. As soon as they have positive delta, they need to do what? They need an offset, which is known as a hedge. Okay, their hedge is going to be adding negative delta. Where do they find negative delta? In selling stock. They sell stock. If you sell Nvidia, it'll drive the Nasdaq. If you drive the Nasdaq, you're going to drive the S&Ps. The only question in here, how far is it going to go? How far is all this stuff going to go? Okay, because it's ironic because you do see a rotation right now towards Apple. Okay, now I will not unequivocally not trade the rotation towards Apple. Okay, I think that people that do this on an intraday basis are going to get rocked because what's going to happen is if Nvidia does keep selling off, okay, the rotation to Apple is going to snap, just a little like crack the back of the Apple rally, and Apple will sell off. One of the thoughts in my head over here, okay, believe me, one of the thoughts in my head is to actually put the intraday position on Apple, because if they do snap the back of Nvidia, and that's not, look, it's down 3%. Okay, it's down 3%, which is if you look at the auto expected moves, but still my heart, it's okay, it's not even statistically significant. It's doing what it's supposed to do. And people look at this, they go, oh, it hit the lower edge of the expected move. That's the sign. It's a sign of what? It's a sign of this is a normal deviation. We hit normal. I am excellent at being meager. Okay. Talk to me when it's 2 deviations. I'm serious about that. Talk to me when it's 2 deviations. In fact, let's get down to the math. I'm going to put auto expected moves back up here. Okay. I'm going to put auto expected moves back up here. And I want you to remember why here in just a second. Okay, I think this is relatively important. Auto expected moves has a degree of accuracy, but it ain't dead accurate. Okay, you know what is dead accurate? When you look at a March 28th, which is tomorrow, basically it's a $50 expected move. Okay, $50 expect, son of a, okay, come on. This platform's just pissing me off in all kinds of ways that I can't even describe. $50 expected move. So this says basically 943. Here, I'm going to mark this up really quick. The week started at 943. Now, couldn't be easier. The expected move on the week equals plus or minus 50 bucks. I don't care what this line is. Okay, this line is only showing that it has just about a 44, 45. It's a $50 expected move. So right now, it's kind of sitting on the lower edge of the expected move. Okay, if you moved 2 times expected, okay, here, I won't put an X because if I put an X, some engineer will send me an email. Okay, if you multiplied expected move times 2, am I putting the brackets on there correctly for you? Okay, tell you what, I got your X right over here. Okay, it's out of frame, but yeah, I'll show you your X. Anyway, you're looking at a $100 move for 2 times expected, which is basically, it's got a pretty good probability of touching. So when you look at an expected move is actually what we term a probability of expiring. So you're looking at a $50 move higher or $50 move lower, but you could have a $100 move higher or a $100 move lower. We're only at 1 deviation. To come to 2 deviations, we'd basically be trading at 840. We'd be trading right around 840 in here for a 2 deviation move. That is kind of where my mouse is. All right, here, I'll zoom in. Anyway. Somewhere in this neighborhood right here would be a 2 deviation move. Okay. It's coffee. So I woke up early. Okay. I didn't start drinking coffee though until about 5:30. Okay. I have a shot of espresso and then I make a cup of coffee and then come to my office because I don't have my coffee machine here in my office because my house is gone. It's all gone. Okay. They're going to rip apart most of the house on, I think it starts in April. Okay. Finish off the rest of it. It's got no floors right now and no walls, but yeah, we'll just chop out some windows and crap. That starts in about 2 weeks. Anyway, let's go back to Morgan Stanley for just a moment. Jumping around, today I'm talking a little bit more about intraday trade. That's okay. As I said, like when it comes to the Nasdaq stocks, let it kind of happen here. Because the interesting thing is if you do, again, as I said, if you break Nvidia, okay, pretty sure you're going to break Apple. And you are already seeing some sell side now in Microsoft. Remember, we said that back here, but I didn't want to short Microsoft. And the reason I didn't want to short Microsoft, even if it goes down, I don't think it's going to be that much. I'm looking for the most opportunistic areas. I'm not sure. Okay, like look, this little monkey hasn't moved at all. Now, when you start talking about, profit targets, okay, literally the profit target is not nearly as important at this point as it basically falling into correlation. I don't care about the profit target at all. I want to see if it actually falls in correlation because I have a very viable risk reward here. All right. The easiest way when we're calculating what's the profit target? When we're calculating profit target, the first thing I would suggest you look at is something like expected move, which on this stock is about a $1.24 because expected move is really what the price action is. So if we have right now, we have a $93 product, okay? If it goes up $1, it goes to 94. If it goes down $1, it goes to 92. What are the options going to be worth? Well, right now, let's say my option's worth basically a buck, 18. It's going to be worth either 50 cents, which I would lose in this case, what? If we go up, I will probably lose, looks like about 70 cents. Okay. So if we go up, I'll lose 70 cents. If we go up to 94, I'll lose 70 cents. If we go down, well, my dollar and change is going to be worth maybe 210. So I'll probably bid offer spread in here. Let's just say it's worth about 90 cents. Okay. So just in that risk reward, it's weird sorry, that one's messed up. The bid's all messed up in there. But yeah, that little thing is going to make about 90 cents if I'm right. It's probably going to lose a little less than 70 cents if I'm wrong. Okay. And there's viability to that risk reward right there. So you're probably somewhere around like trying to make 90 cents. The option would be worth just about $2 would be the first target. But quite frankly, okay, I wouldn't look at it per se just that way. I would probably, if the marketplace starts selling off, when markets sell off, you want to technically hold to late in the day. Why do you want to hold to late in the day? Because statistically speaking, okay, it doesn't matter what your profit target is, statistically speaking, okay, the big sell side activity comes in very late in the trading sessions. And markets have a very high probability of closing at extremes. That can be the high or low. So don't discount what I just said. It could be to the upside or the downside, meaning that if a market is rallying huge, it often closes at the extreme, like at the highs. If the market's selling off huge, it usually and statistically would close at the extreme, at the low. And that's important. Okay. Robert was asking me what's my deductible. Okay. Yeah. Robert, my deductible is $1,000. Kind of a drop in the bucket. I think we're up to about $2 million in damage here. Okay. It's all right. So I pay 1,000 and it's about $2 million of damage, of which they're probably only going to cover about half that. Okay. It's not good, man. It's not good. Anyway, we'll see what transpires here. But you're going to have to, like days like this, kind of evolve. It's like Nvidia. Nothing goes straight down. It tried, but nothing goes straight down because it takes time in here, right? The puts are definitely being acquired. But what's interesting about this is the number of calls trading. It's still really big. Okay, it's still really, really big in here. 400,000, and I'm surprised how many calls are still trading. What this implies to me is that they're still trying to bid back in Nvidia. They're still trying to get this little monkey moving in the right direction. Meanwhile, Meta kind of continues to slip in the backdrop, right? Microsoft, which was much stronger on the day. Check this out from auto expected moves. It's lower edge to the expected move. Google, nothing this week. Just taking you through Meta outside the lower edge of expected move. Okay. Nvidia on the lower edge of expected move. So we're at this kind of, in my opinion, like a little bit of like a juncture where we could crack quite considerably lower. We'll see what, again, let it evolve. Boeing has a little bit of a bid back under it. I'm bringing up Boeing because we have a Boeing, Wells Fargo. Wells Fargo is just, I'm so frustrated right now by Wells, okay? Because I really think that trade is probably going to work, but we're out of time. I'm really frustrated in there, okay? This is a marketplace that just in Wells, it just will not die. We're not completely dead because even if we sell off between today and tomorrow to like 56, there's some salvage value in here. Okay, not much, but there'll be a little salvage value if we sold off 56. Okay, I'll keep an eye on that one. For those of you that are in-out spread on Wells, Boeing is basically flat, and XLE, which some of you actually got out of profitably, is up about 7%. Right, so I'm sitting with all three of those, and I'll continue to add, but let's see if there's a little change in pace in markets. Right now, okay, markets are fairly sloptastic. Like I'm not really looking at anything in here that's a big standout. No, there's nothing that really other than Nvidia, which kind of dragged the markets under. There's no standouts. Tesla, my catapult is actually working in Tesla. Although, as my catapult's working in Tesla, I'm still taking a hit on the call that I sold. Okay, but I'm making that money back on Tesla. So if you think about the catapult, I sold this call way out here and I bought this Tesla spread. We're rallying up. Tesla's making money. The call is losing money. Give it time. Just give it time. Okay. Because none of the decay has come out of the call. And Tesla, though, is all kinds of sketchy in here. Okay. There's a feel to the marketplace today that is, in my opinion, very heavy. Okay. I'm going to say that again. There's a feel, in my opinion, today that is very, very heavy to this marketplace. By heavy, I simply mean, okay, it looks like rounds of sellers just keep coming back in. And it's interesting because I can't put my finger on exactly what is seeing the sell side. Right now, it's clearly the financials just took a hit, took the S&Ps down. Okay. I don't know why. I mean, look, I don't care. I mean, I'm not sitting here watching the news, but I also just saw Microsoft take a hit in the last 3 minutes. So I'm watching Microsoft, but the financials just got clocked out of nowhere. And did it actually impact our Morgan Stanley trade? Yeah, you better believe it did. Okay, look how fast Morgan Stanley. You want to see something crazy? I'm not looking at the put in here, but I know that put jumped in price. Okay, so your $1.20 is now $1.50. You just leave it alone, right? Who cares? Just leave it alone. Even the thought of volatility in this marketplace, even if you smell some volatility, they're going to run these puts higher because that volatility is relatively low, especially if this in the money. We're all the way up to like an 83 delta. It's good bang for your buck. Look at the implied vol of this thing now, right? So it's yeah, it'll be effective, but we're much more about right now about intrinsic value than anything in there. Well, we'll see how this thing goes in the next couple of moments. I know some people were mentioning mentioning Broadcom. Okay. Again, Broadcom is much, it's to a lesser degree. Again, I have a tendency not to look at Broadcom. Number one, on a year-to-date basis, okay, it's up 20%. So you're up 20% on a product. Whoops. Okay, swing and a miss. You're up 20% on a product that's about 600 billion. It's not even in the realm of a Meta, which is up 40%, double that. So it's up double, Meta's up double, and it's double the market cap, if that makes sense. So it's not that I don't watch Broadcom. You won't notice Broadcom on my screen. Not that I don't pull it up once in a while. Okay. I'll pull up what is methodology is like what is the driver. Okay. I don't care about everything else that I construe as being superfluous. Like even Meta, okay. Meta is like sideshow Bob right now to Nvidia. Okay. They're trading in some relative, correlation, but it's still sideshow Bob for sure. Microsoft, you look at Microsoft, you're like, well, Microsoft is only up 13%. Yeah, it's the biggest market cap out there, sitting at, a behemoth of $3 trillion. It's still 3.1 trillion, which makes, 600 billion look like kind of an afterthought. When it's a magnitude of 5 times greater. Okay. Microsoft is literally 5 times the size of Broadcom. Like you don't even think about it at that point. You gotta zero in this marketplace on what the drivers are. Okay. And I know Jeff Bierman will come on here in a couple of moments and Jeff will be talking about, something like, he likes, it's like Abercrombie and Fitch. And I'm not going to, damn it. Okay. He'll be talking about something like ANF, okay, which got, rocked yesterday. I'm not going to dispute or diminish this stock's capability. I watch a lot of the retail, and I'll tell you why I watch the retail. Because retail, that crap is not good right now. There are retailers, they are getting annihilated. Look at like Lulu, annihilated. You're not going to feel it in Walmart until it's too late. You got to look at some of the high-end crap. I always think about this in terms of, and I'll give you one last thought, and then we'll turn it over to Bierman. But You know, I always think, oh yeah, I have to give Jeff the sorry, cracking myself up over here. Um, I'll give a little credit where credit's due on this one, but I always look at like those high-end retailers. I don't look at so much of the crap, but like, you know, Abercrombie and Fitch, I wouldn't exactly say it's like a high-end retailer, Jeff. Okay. But I will, I look at the high-end retailers. I was really surprised. Like, I think it was a week or two ago when I was doing the weekend update. I was talking about like it was Gucci and it was like Louis Vuitton and Lulu. Okay. And I even keep an eye on stuff like Nike, okay, which has been getting killed. Nike and Lulu really bothered me on that front because if the consumer is cracking, okay, it's this like top-down approach. It actually reminds me almost of like you know, remember like I don't know, like 100 years ago, trickle-down economics. It's not 100 years ago; it's the 1980s, but like trickle-down economics. Okay, if you're going to see the retailers crack, it ain't going to be the WalMarts. Okay, you're not going to see those crack. Not until the end. You're going to see stuff like Costco possibly go before it. And Costco had a little bit of damage, taking on a little bit of water, okay, but nothing in comparison to some of the other retailers, which are taking on big hits. So I definitely, by the way, look at this in the year-to-date percentage, down 23%. This thing was rocking. Okay, a couple days ago was rocking, had nothing but problems from there. I don't take that stuff with a grain of salt. There's retailers that are still doing well. Okay, most of them are getting absolutely annihilated. Okay, and then I start to look at stuff and look. Reddit came out with an IPO. Okay, well, I don't know what the hell to call this. You want to say Trump came out with an IPO? Okay, which is up like $8 over here. This, okay, you have to understand is a one-sided market. It's a one-sided market. And at this point, people may not like me saying this, I'm not trying to be political. People are voting right now, okay, in the market. That's what this is. They're voting in the marketplace. Don't get caught up in it. It's a one-sided market. You can only buy the stock. You can only buy the stock. It's not hard to borrow. It's impossible to borrow. In fact, and I want to show you something in here because it's imperative. Okay, if you trade, you damn well better understand, right? The put call with 1 day left, okay, the put call parity looks pretty good. Like that's in line, okay, meaning you could buy puts in here, no problem. When you go a little further out in time, look at the cost of the puts versus calls. Look at it, okay? $30 for puts, $15 for calls. Ruh-roh. It's because it's actually, there's basically nothing to borrow in there. The put call parity is all kinds of screwed up, okay? It's an absolutely egregious marketplace. You trade in here, you die, all right? I'd be real careful with it. I'm not saying the stock's going to implode, okay? But I am telling you right now, you can't get, you know, bearish in here. Even using spreads, you're going to get killed. It's 260% implied volatility. The puts are trading for double the price of the calls when you go 50 days out. There's big problems in there, people. So in my opinion, just based on bid offer spread alone, avoid this like the bubonic plague. Okay. If you're trading options in here, and I don't care, you know, oh, such and such got on TV and said, I don't give a damn. Okay. That's 2,422 monkeys that just traded a market that's 635 at 680 on a $66 stock. You're just going to get killed. Okay. The bid offer spread alone, it's implausible. Like you just can't make money in here over time paying that much in that marketplace. So be careful. Okay. It's not, again, I think people are kind of voting with their wallets on that one a little bit. It's fine, but that's not a marketplace that you want to be involved in. Traders would avoid that marketplace. Okay. So don't get too caught up in just that. Anyway, with that, I'll leave the Morgan Stanley position on. I'll let you guys know if and when I'm able to get out of that little monkey. Like, look, you know, it's just going to be a day. It has to kind of evolve and let it do just that. Nvidia down, but definitely not out. Stay tuned. Professor Jeff Bierman's coming on here momentarily. Thereafter, we're actually going to have even an at the close today packed schedule. Thanks everybody for